Hello and welcome back to another episode of the Investor Financing Podcast. Today's show is all about property management and entrepreneurship. Please welcome the founder of doorgrow.com, Jason Hull, to the show. He currently resides in the beautiful city of Austin, Texas, which is like the city that everybody talks about the huge growth that's going on. And I was a former California transplant to Nevada, but all the other Californians are going to Texas, it seems like. So
Yeah, I'm a transplant from California too.
All
So I
right.
got here just before the pandemic though. So
Are you
I made a
North?
smart decision.
Are you NorCal or SoCal?
I was SoCal.
See, I was Northern California.
SoCal, I have more reasons to leave if I'm a business owner.
Yeah.
So
Let's first dive in. Property management's exciting, and as an investor, it's all like I buy out-of-state properties, and I heavily rely on property managers. So we're going to dig into that, but let's just first kind of talk about entrepreneurship and your journey and like how you saw the opportunity and the need in the marketplace for to help property managers, because it's like you know, it's a great business model, but a lot of property managers fail because they can't get landlords, they can't attract tenants, and the landlords get mad because they're not doing a good job, and then the whole maintenance thing. And so, how did this
yeah.
journey all start for you?
Well, yeah, property management's a tough business. It's a tough industry, but in business in general is tough. Running a business in general is hard. I mean, most businesses fail. Like if we look at the stats, right? So, but how did I get into this? Well, long story short, I started my own web design company, which meant I was a freelancer building websites, right? Solopreneur, doing it on my own. And I was like, I'm going to help people do everything. I'm going to do their phone systems and IT stuff and websites. And so it was open potion website design and business solutions. And eventually I realized that's not very effective to try and do everything. So I just started focusing on website design. And one of my earliest clients was actually my brother. He had just gotten done, my younger brother got done with college at USC. And they're in SoCal. His friend became his business partner. They bought into a real property management franchise. Didn't really know what they were doing at the time. And they got some website from corporate they thought was like not that great. And they're like, hey, could you give me some tips? And I was like, yeah. So I gave my brother Brian some tips. I'm like, why don't you do this? Add some, trust symbols, just take some of these paragraphs, turn them into bullet points just to make it more skimmable. So he made a bunch of changes. And then he was like, I don't really still like this. Could you just build me a website? You might know what you're doing. So I built him a website, and then I started getting all of his fellow franchisees wanted what he had. They're like, hey, this is better than what we're getting from corporate. Could you do our site? And some of these were guys with 5,000 doors, 3,000 doors, dominant in their markets, throughout the US. And so they've been in business a while, and we had great backlinks coming to us. And so organically, we started showing up for property management website design pretty quickly. And we started getting property management businesses wanting website design from all over the US. Now, at that time, I was charging way too little. I didn't value my time. But eventually I started to build a team and make all the mistakes most entrepreneurs make early in their journey and figure stuff out. And eventually we started to I ate my own dog food and decided to focus on a niche and, niche down and focus on property management specifically, because that was really kind of the lion's share of our revenue coming in. It was an industry I had asked a ton of questions to, got really familiar with. And I was at the point where I was like a fly on the wall in the industry to some of the most successful and some of the worst property management businesses. So I was able to see the contrast that most people haven't seen. I don't think there's anybody else in the property management industry, at least in the largely the single family residential space or small multi space, that has the insights that I have. They just have not seen in as many companies. They don't transparently get to hear the dirt and the sad stuff. And I get, I kind of have dibs on all the best ideas and strategies. And then I also just spend a lot of my time and money investing in myself and in coaches and in mentors. I always have at least like two or three coaches going at a time. And I spend a lot of money on that, almost a ridiculous amount. But for me, that's what I love to do. Like my personal mission in life is to inspire others to love true principles. And so what that means is I just love learning what works and then sharing it with other people. That's fun for me. I would do it for free for fun. I'm doing it for free for fun right now. So it's just fun for me. I love being able to do that, and getting paid to do it with clients is like just icing. It's awesome.
Yeah, I mean, I think the we're in an era of information sharing. So if you're good at sharing information and and it resonates with those people, indirectly it's going to lead to business. So although we do a lot of stuff for free with the intention of not, getting anything out of this podcast, somebody might hear this that's a property manager or aspiring property manager and say, "Oh, this guy resonated with me," and it's very true. So I love the fact that you're investing back in yourself an insane amount of money with coaches, like performance coaches. Like what does your coaching look like? Do you have a performance coach right now, or what does that look like right now for you?
Yes. So coaches right now, I have a fitness, like nutrition coach, really cool guy. I have a profit first coach because I'm a big fan of Mike McAllowitz and some of his material. I've had him on my podcast. So I have a profit first coach slash accountant. I also have a separate accounting firm that interacts with her, with my profit first coach. Because the financial stuff isn't as fun for me, right? That's not like my passion in life, right? So I get a lot of support there. And then I have a coach that focuses on coaching coaches. And I think I pay that one like 4,800 a month. And but he's got an awesome program. I'm really enjoying it. So, and he has material to support multiple team members of mine for various aspects. And then, what else? I'm just wrapping up coaching with a coaching program that is also pretty expensive, but it's focused on more on the sales side and setters, and they support our setters and closers in our organization, and my sales manager and stuff like that. And so, and sales is something you can learn, I think, infinitely about. Like that's never ending. So sales and marketing. So,
What's
yes.
what's the biggest takeaway on sales? Like, so I heard you say that like in the beginning you're doing stuff like super cheap, and it's like nobody really values people that do stuff super cheap. It seems like you gotta like get the raw end of the stick, right? Like, cause like
Yeah.
people just don't like. But once you start charging what you're worth, then it's like the other way around. And sometimes you're wondering like these coaches that you're paying this coach $4,800 a month, which seems like a lot of money. It doesn't seem like a lot of money to most people. That's like their salary.
Well, I mean, I look at it this way. Like I started with coaches that were a lot less money. Let's be real, right? And some of them were really bad. Like at that level, you're kissing a lot of frogs to like find somebody that's good, I feel like. And you don't know, because when you're at a lower level in your entrepreneurial journey, it's difficult to know who's legit and who's not. But as you kind of scale and ascend the ladder, you get a lot pickier about who you're going to take advice from, you know. And that concept, we hear that a lot. Like you need to like charge what you're worth and know what you're worth. But I don't really like tying things to my personal worth. I feel like a human being or a soul is priceless. There's nothing worth like a person, So when people are like, "Oh, charge my worth," I think you can charge what the market says you can charge. And so sometimes it's just a matter of confidence. Well, here's a quick mindset shift one coach kind of threw at me that I thought was really powerful. So I was charging at this one point, I was charging like 5K for a program. That was like 6 months. And this coach said, and sales were going pretty well, but we weren't making as much money as we're making now. And he said, well, what would happen, worst case scenario, if you just doubled your pricing right now? I'm like, I don't know, but that might cut sales in half. He's like, yeah. So let's say sales gets cut in half, but you double your price. What happens to your revenue? I'm like, it's the same. He's like, okay, it's the exact same, right? Sales gets cut in half, but you double your price, revenue's the same. He said, but then what happens to your operational costs?
Mm-hmm.
My head of fulfillment, because we were doing websites and branding and like cleaning up businesses and all this stuff for property management companies. He was like overwhelmed. We had like 80 active website projects at one point. He was like just drowning. And I was like, well, our operational costs get cut in half easily, right? Because we have half the amount of stuff that we're fulfilling on, but we're getting paid the same amount. And he's like, so how much more profit will you have? I'd be like, that's way more profit, right? So I did it. I just tried it. He's like, worst case scenario, let's see what happens. And that's pretty much what happened. Sales dipped by like 50%. We were still closing though. And and we were able to, and here's the other side effect that was interesting is we were able to spend at 2 to 3 times the amount of time per client now, really investing and supporting them and taking care of them. And so in most every business, if you're not charging enough, you're not going to have great customer service. It's just that's the first thing to go away if you're not getting paid well enough. And the market, nobody knows what the market's willing to bear until you test it. So one coach told me like they knew a business owner that would just raise their price by a little bit every single month until sales started to get really impacted or hurt. And they like, so they could figure out where's the ceiling. So a lot of people don't know. And I think the other challenge is what I see in the property management industry about charging, what you're worth or, charging enough. Most pricing in most businesses is set towards the cheapest category of buyers in the marketplace, not the majority, if that makes sense. So psychologically, there's 3 types of buyers. I call them the cheapos, the normals, and the premiums. The largest group, which is roughly about 61%, based on, I don't know, anecdotal, like what most people post and say. The middle category, the normals, as I call them, are about 61%, almost like 2/3. The second largest group are the cheapos. They're maybe, I don't know, 24%, something like that. So almost a third. And then you've got the remainder, which I don't know, maybe, I don't know what the math comes out to, what's left, maybe 15% or something. But then you have the premiums. So, and the difference between these 3 categories is their level of price sensitivity. So the cheapos are really, even seeing the dollar sign symbol is painful for them. Just seeing the dollar sign symbol. So you'll notice if you go to a premium restaurant on the menu, they eliminate the dollar sign symbol from the pricing. They also eliminate the cents and the period. It's just like 24 next to a piece of fish, or 36 next to a steak or, whatever it is, depending on how nice the restaurant is. And so the middle category, though, are somewhere in between. And then you've got the premium. And I can go all like into this. There's like the psychological principle that I'll teach sometimes called the Goldilocks principle of how you can close more deals on that middle group, which is the majority. But most are priced towards the cheapos because the cheapos are the noisiest and the most verbal and the most annoying. And they're also the only ones left over after word of mouth captures the best stuff. They're the ones that you can attract or find through SEO or pay-per-click or content marketing or social media marketing. Or paper lead services. They're the scraps that fall off the word of mouth table, are the cheapos. And that at the cheapo point, they're so far along in the sales cycle, they view everybody that does whatever it is that you do, product or service wise, as a commodity now. So now they're just looking, they think you're all the same. So they're just looking who's the cheapest. Those are cheapos.
We don't want cheapos.
No.
No, I mean,
and they're not even the majority. So most people are pricing their business pricing towards the noisiest and the worst and most price sensitive, shittiest prospects that respect you the least. That was me early in my web design career, right? Transitioning into coaching, we've transitioned into trying to attract more of the normals or premiums because they're way more fun to deal with. They're way less intense. They're a lot easier to they don't try to micromanage you or control you or make you their employee. They respect you as a coach. They respect you as a business owner. It's a different game.
It totally makes sense because I'm in the lending business. So a lot of times I'm getting these calls. What's your rate? What's your fees? What's your points? It's like, wait, I don't even know anything about your deal. You don't know anything other than like
Right.
you want to know this, and now you're just asking for a rate and fee, but we don't know what you want to do, what the strategy is. And so I deal with that a lot. Early on in my business, I was always trying to please people. Like, and it was always, if something went wrong, I would cut my commission to make the deal work. And I'm like, that's
Yeah.
so stupid. You know what? And then my friend Bill, he goes, Beau, he goes, listen, you have 24 years of experience in the lending space. Like, even if a deal's easy for you to put together, it's easy because you spent 24 years building your craft
Yeah.
and doing it. And I don't really focus on cookie cutter type of deals anyways. And it was funny. I just got a term sheet for a borrower who's buying this large tract of land. And it caught my mind what I was going to charge the guy because we didn't really have that discussion. I should have probably had the discussion earlier but it was just a quick kind of thing. So I had to move fast. And in my mind, I'm originally like, I'm just going to give him I'm going to cut my, make my fee really, you know, bottom of the road just because I didn't spend that much time on it. And it was, but then I'm like thinking, God, like I potentially going to help this guy make hundreds of millions of dollars on this 150-acre tract of land he's buying. And I should be paid. And I'm not going to
Yeah.
overcharge the guy, but why am I thinking, why is it always me that feels guilty? Like I used to feel guilty
Yeah.
for charging, and I'm like, wait a second, because
Yeah. You weren't valuing yourself enough. Like we've all been there.
exactly.
Yeah.
And here's a good point too. I want to as now let me put on my real estate investor hat.
Okay.
I recently bought some properties in Pennsylvania, and it's like, property managers, they can be anywhere from, on like these small duplexes, fourplexes, they can be anywhere from like 6% to 10% usually,
Sure.
what they charge for a management fee. And quite honestly, I do not mind paying 10% because it all comes down to like, hey, 10%, you do a great job. I don't have to worry about this. I'm buying real estate to be passive. I will pay you more if you just do a good job. Like
Yeah. And what's average rent there for on your properties? Like $800,
so
$900
right. So, I bought
on a
for
unit.
example, yeah, I just bought a duplex, and each side's going to rent for one for 1,000, one for 900 or 800, somewhere in there.
Okay.
So,
Yeah.
I like to buy in these kind of inexpensive markets with decent cash flow price to rent ratios. So for me, I'm like, yeah, like, and this property manager so far has been awesome. We had to get some work done on the house prior to getting the tenants in there. And it's like, I don't mind at all. I'm glad to pay more so I don't have to deal with anything. I don't want to have to deal with anything. That's why I'm buying real estate. So passively, it's going to appreciate over time. I'm going to pay down the mortgage, and I'm going to get rich slowly. And that's fine with me. And then I can focus on my core business here. So I don't understand why people always shoot for the cheapest cost, because you get what you pay
Right.
for. At the end of the day, you're going to get what you pay for. If you go on Fiverr and get somebody to develop a website for you for $100, you're going to get a $100 website. Now, that might be a good starting place wherever you are in your life, but
Sure.
you got to realize you're getting a $100 website for a reason. And I think there's a happy medium. And then I was just at an event this weekend, or no, not this weekend. It was Monday and Tuesday. It was really good because I invest in myself just like you do, because I find that that's the only way to go. It was called Grow with Video. It's about, building a YouTube channel and things, which is kind of a passion of mine to share information.
Yeah.
And one of the kind of vendors that was there does like a lot of content marketing and stuff, and like their pricing was very expensive. But I'm like, and I caught myself thinking, oh, that's like way too much money. Like, I could never imagine paying that much money for this service. And then I'm like, you know what? Let's just see. So I set up an appointment to see, hey, like, this is a huge investment. Like, I would never have thought I'd make a huge investment like this for, a marketing kind of to build and grow my audience base. But then I'm like, you know what? Like, what if it really comes down to who, not how? Just like the book, which is a great book. And that's my philosophy this year. I said, I'm going to pick 2 books to have philosophies around this year. Who, Not How, and then Never Eat Alone was an older book, but it's one I just listened to. So those are like, I'm like, these are good tips if you just kind of apply like these concepts, like who, not how. Like, I don't edit video, so who's going to edit my videos? Find a good editor, And so I happen to find a great editor in the Philippines, right? And so
Yeah.
it's leverage. It's everything is leverage. And I think we haven't even dove into property management yet, but I think people that are going to watch this in the future or listen to it on podcast, I think this is like the fundamental principles of any business entrepreneur out there. It all stems with like investing back in yourself and learning these, because Jason didn't learn this when he first started his business. It took him years to get where he's at, and he's still putting over 6 figures plus in coaching a year into himself, and he probably will continue to do that. And if you look at the most successful people, they all have coaches. So what does that say? You should get a coach. You should write down your goals. Look, he's journaling right now. He's taking notes. If you notice that there's no success leaves clues. It's true. And so I've interviewed so many successful people. I know so many successful people, and it's not that they're that much smarter than any of us. It's just that they continue to improve, and that's what you're doing. So that congratulate you.
Yeah. So, yeah, thank you. So I think, going back to what you were talking about, like property management price and being cheap, like here's the thing. If you as a business owner are showing up in life as a cheapo, where you're looking for the coupon code on every single thing you buy, you're always trying to find the cheapest, guess what you're going to attract? So I once had a client, this is an ironic, humorous situation to me, but they were posting on Facebook and they were complaining. They're like, why are there so many property owners that are so cheap, always asking for discounts and so annoying? And then in our Facebook group, they went and posted, anybody have a discount to this maintenance coordination software? I don't want to pay full price. Right. And so we have this inherent blind spot. If we're attracting a lot of cheapos, it's because we don't value ourselves. And we're not going to value ourselves if we're not valuing everybody else in the marketplace too. And we're always looking for the cheapest solution instead of the best. Cheapos always end up spending more money in the long run. They always spend more time in the long run. And time is the one commodity that is the most limited resource we have. We're all going to die. Trading time in order to save money is the stupidest trade I think that could exist. But that's what people do at the beginning of their journey in getting a job or whatever. That's the lowest rung of the ladder. I'm going to give you my time based on an hourly rate, right? Eventually, we want to graduate beyond that, hopefully, especially as entrepreneurs, right? And when you're talking about like property management, for example, in Pennsylvania, like between 6 to 10%, on $1,000 unit, the difference is between $60 and $100. And if something goes wrong with that property, it could be tens of thousands of dollars. Like, let's say there's just a leak that goes unnoticed, or there's no inspection done and they completely turn it into a meth house, or whatever, right? Like the peace of mind is really what you're buying when you're buying property management. You're not buying somebody to collect rent or do maintenance coordination. You're really buying peace of mind. And really, as every business owner, that's what we need to recognize. That's what most people want to buy from us, is safety and certainty. That's really what we're selling a lot of times.
I think the one place that I hear the most kind of criticism within property management is that the maintenance, right? That's always the issue. It's like, oh, they do a good job, but I don't know if there's a way to create more transparency in like, hey, our maintenance is like X amount per hour, or, like that's always been kind of something underlying where probably as an investor, I should have got more clarity. So I had more peace of mind in that aspect. Like when there is something that goes wrong and you get a call, how are you going to be billing, right? Because that seems to eat a lot of the investors up, right? On the smaller properties. I mean, once you get into the big multifamily, it's a lot more systematized and there's more professionals in the space. But
if you have a good partner that you can trust, see, the thing is when picking anybody to manage an asset for you, they need to be somebody that you feel like their values are in alignment with yours. It's not finding the cheapest company or the company with the best rates. It's, do they have values that you can align with, right? Because you have something that you want and they have something that they want. And if the only thing a property manager wants is money, you probably don't want to work with them, right? Because that means money above ethics. That means money like, if I can mark everything up on maintenance, I'll do it, right? So most property managers actually charge too little. They don't take care of themselves. They don't value themselves. And so they put in a ton of time and effort that they're not even getting paid for a lot of times. So I think one of the big things I hear property managers complain is they'll have some owner come to them and they're like, well, I want multiple quotes on every single thing. So it takes like 2 weeks to get a water heater replaced. because they're like, well, I need most property managers have the best vendors in the market because they've vetted this through hundreds and hundreds of situations. They know who has the best rate to like quality ratio, because that's who they're going to work with, because they get the job done in a timely fashion well, and they're not usually the most expensive, because they know that they're not going to want to work with the most expensive. So they've already done all this work. The problem is owners will come in, not trust them, and try to micromanage the process and force them to use a certain vendor or do a certain thing a certain way or get multiple quotes, but they're not as good at property management as the property manager. They do this every day, all day long. And so you just need to find somebody that you can trust, and they need to have, the property manager needs to have enough certainty and confidence to say, no, Mr. Owner, we're not going to do it your way. We're going to do it our way because it's better. And we know what we're doing more than you. And that's going to allow you to alleviate that concern or that fear that you're being taken for a ride. Because you want to know, at the end of the day, it's not about what people do. That's not really what people buy. It's, you want to buy their why. Like, why do they do it? And what are their values? And if there's alignment there, then, because if somebody comes to you, for example, for loans or whatever it is that you might be selling, if they're asking all the features and benefits and all the minutia, that what they're really saying is they don't trust you yet. And once they trust you, they let go of all the what's. Like, what are you going to do in this situation? Well, what about this? And how are you going to do that? All of that just means they don't trust you. And if they trust you, they become a lot less price sensitive. They're going to allow you to do your job, because ethical, good people are the best people to be working with, and you can trust them. You need to have a trusted partner. And that's the difference. And so that's what I teach my clients, is that sales and deals happen at the speed of trust. It's all about trust. And so going back to what you asked about, like sales, my greatest sales secret is what I call the golden bridge formula. And this is like the most simple script. This is how I can double people's close rate, even if they're shitty at sales and they suck at it and they're terrible at sales and selling. It's the most authentic way I know to sell. So basically, the golden bridge is where you first identify your prospect and what they want, their why. Where are they trying to go, and why does that matter to them? That's the other side of the bridge. You need their side first. So you opening up a sales conversation, you take control right away. My intention for this call is to find out a little bit about you, your situation, get to know you, see what you're trying to do, see what your goals are. And you just get curious and ask a lot of questions. And your goal is to identify their pain and their pleasure. What do they want to move away from, and what do they want to move towards? And go deeper until you get to the bedrock why, which is almost always some sort of feeling. Like, why do you want to be able to fund your kid's college education, or your child's wedding someday, or whatever? Because I care about my family. Okay, cool. So how can I help you take care of your family? Right. So we find the why, and then to build the golden bridge, we share our why, our business why, and connect it to their why. That's the golden bridge. And the business literally is the bridge. Well, I guess it's figuratively, is the bridge that connects our motivation, our why, to their why. And if there's overlap, there's a deal, right? And so the golden bridge formula that I use is your personal why statement. What that means is connect it to your business why statement. What that means is maybe get into your company core values, the whys, the hows. You don't really even have to get into the what, like, oh, we're going to do maintenance coordination and leasing and inspections and rent collection. You don't even have to talk about that necessarily. More about the how. So you build that bridge, and then you're going to connect it to their why. And so if I were to like say this myself, I'd be like, hey, let me tell you what I'm all about. So I'm Jason, I run DoorGrow, and my why is to inspire others to love true principles. And what that means is I love figuring out what works and sharing it with other people. That's just fun for me. I would do it for free, for fun. And our why at DoorGrow is a vehicle to give me the maximum level of what I call the 4 reasons in life, which is fulfillment, freedom, contribution, and support. These are the 4 things entrepreneurs want. And there's that 5th reason everybody else wants that are not entrepreneurs: safety and certainty. And our why at DoorGrow is to transform property management businesses, business owners, and their businesses. And so what that means is we want to change the industry. Most property managers suck. We want to level up the property management industry. We want to get you to be viewed as a trusted advisor in this industry. And we really believe that good property managers can change the world. They make tenants better. They make owners show up better. Lots of people complain about landlords. Lots of people complain about tenants, and they make properties better. They make everything behave better if they're a good property manager. And they have a massive ripple effect. And that's exciting to us. And what you want, property manager, is you want to build your business, you want to grow, and you want to have a business you can be proud of that does align with those 4 reasons. That you feel like you're making a difference instead of hating your day to day and being mired in just the toilet tenants and termites and et cetera. You want to have a business in which you get to be the entrepreneur, not the property manager. You can hire the property manager. And that's exciting, right? Because I built the golden bridge. So, and that's a formula anybody can follow in most any business. Personal why, business why, and connect it to their why.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. When people come to you now, they're either already been in property management for many years, or maybe they're bought into a franchise and they're like, okay, like, we need to figure out how to grow this thing the right way. And that's where you come in, and you can help in many different capacities. It seems like you have like a coaching program where you actually work with these people, I don't know how often, weekly, monthly, and then weekly, and then you're also getting their marketing positioning correct. They're a good website. They're getting found organically when somebody types in property manager Austin, Texas, or wherever they're at. They're getting found there. They're getting their tenants to give good reviews, so their Google ratings look good because they're managing correctly where people are pretty happy. I mean, people always bitch usually about something, but in general, I mean, if you go on a property management, or if you look for a property manager in any city and you look at reviews, most of the reviews are bad. So it's hard.
Not my clients, but yeah, most property management businesses suck. Like, let's be honest. Almost every property manager that comes to me that's looking at starting a property management business, that's what they say. They're like, well, I'm going to start a property management business in my market because I can't find a good one. I'm an investor and most suck. I hear that every week. It's like become humorous. And I'm like, and they're like, I'm going to be the next non-sucky. I'm going to be the first non-sucky company. And I laugh because I know that they're going to be just like all the others, unless they work with me and they do something different. Right. So, because that's the default of the trap they fall into, because they all think they're going to do the same things to grow. But it's even worse. Like the startups that come to me, they're like, I'm like, cool, what's your strategy? Well, we're going to be better than all the other companies in our market, and we're going to undercut them and charge less. I'm like, oh, okay. Yeah, let's see how that works out. So you can have less resources and capital to be able to have good staff and to do a good job. And you're going to outperform all the companies that are, trying to make it work. Because no entrepreneurs wake up in the morning, I don't think, and say, I want to have a shitty company today. Like, I want my property management business or loan company or anything else. They don't wake up and go, I want to have a sucky company and just do the bare minimum. That's the default of what happens if they make the wrong tactical moves trying to grow their business. Then they don't get the ROI. So they don't have additional money. They are worse off. And then the first thing to go is customer service, typically. So, and this will apply to any business, anyone that's an entrepreneur listening to this, maybe even investors. But, one of the biggest mistakes we make in trying to grow businesses is we focus on advertising. Because every business owner comes to me and they're like, well, I just need more leads. If I just had more leads, all my hopes and dreams would come true. But not all leads are equal. And so what the leads they're used to, if you say, well, how have you gotten doors so far? Or how have you grown your business so far? They're like, well, I get some great word of mouth business from clients and from other people. I just need more leads. So they are assuming that all leads are going to be like warm leads, like word of mouth. Word of mouth has a close rate of typically like 90%, like 9 out of 10. Right? Whereas cold leads, like through advertising, pay-per-click, SEO, et cetera, where they don't know you, trust you, and like you, which is what makes them cold to you, the close rate's typically like 1 out of 10. So there's like a massive difference between cold leads and warm leads, and they don't distinguish between that. And they think, well, all leads are equal. So then they go do cold lead marketing, advertising channels, and pay out a bunch of money to ad agencies and pay for ad spend. And then they're like, these leads are like garbage. Well, yeah, in contrast, when they have a 1 out of 10 close rate, like 10% close rate versus like 90%, yeah, they like in contrast, they're garbage. And so they focus on all these cold lead marketing channels. They spend a ton of money. They're getting very little return. But the other big secret between cold and warm leads is time. Cold leads take 2 to 3 times the amount of time in the sales cycle to nurture people, warm them up, and to get a deal out of them. So you spend thousands more dollars, whereas warm leads really, if you do it the right way, cost $0, no ad spend. You don't really have to pay for marketing. You can probably just pick up the phone or set up partners or create relationships. Whereas cold leads cost thousands of dollars. And for property managers, sometimes their acquisition cost per client or door on cold lead marketing is around $800 to $1,000 a door. I mean, that's the equivalent for some of giving away almost a year of management away for free. It's not a profitable business, right? So if you were charging 10% on $1,000 rent property, you're going to make like $100 a month, right? That's it.
Is there, if somebody was getting started, wanted to get in the property management space,
Yeah.
I see there's a bunch of property management franchise concepts, but not all are equal. Is there, how would you vet different concepts?
Yeah.
Like if
Should we
you,
talk
because,
about property management franchises?
yeah, I'm curious on this.
I'm not a fan of property management franchises. I feel like, can I swear on your podcast?
Oh yeah. Yeah.
I feel like they fuck up the entire industry. So, because here's the thing, let's point out the reality of who's going to be successful in starting a business. They're going to be entrepreneurs, right? They're that cowboy spirit. They're willing to take on risk. They're willing to do things a bit differently. What's different about them is they value freedom, fulfillment, contribution, and support, the 4 reasons, as I call it, for starting a business, more than that 5th reason that everybody else wants, which is safety and certainty. Everybody else, the people that work for us as entrepreneurs, the people that come to us and want our services, they usually want safety and certainty more than freedom and fulfillment. It's a higher priority. That's why they go get a job. It's safer. That's why they're all wearing masks. That's still, they want safe. It's more important to be safe. And there's nothing wrong with that. That's just how they're different. And entrepreneurs, that's why we feel so weird in this world, because the majority of the people out there value safety and certainty more than freedom and fulfillment. Everybody wants freedom and fulfillment, but safety and certainty for a lot of people is a higher priority. Like during the pandemic, I was walking around Costco without my mask, and there was a bunch of people there that everyone was wearing masks except a small few people. And I would just say, like, do you have a business? And they would say, yes. Anyone that wasn't wearing a mask, I'd ask, are you an entrepreneur? They're like, yes. And they were the ones that, like, they put freedom on top of safety and certainty. And those are just different values, right? There's different values, but entrepreneurs that go and buy into a franchise might not normally be entrepreneurs, because they're not looking for the maximum level of freedom, which means I have no control from corporate. I can do things the way that I want. I can have the website that I want. I can do the marketing that I want, and I can go to any area I want instead of being corralled into a single area. People that are like, well, that sounds risky to go start all that up. I want to collapse time and get some safety and certainty. They usually will go towards the franchise. So the challenge with franchises in general is they attract a lot of times what I call wantrepreneurs. They want to be entrepreneurs, but they really want safety and certainty. That's a higher priority. So they might be more operator type of entrepreneurs instead of visionary entrepreneurs. They're not the risk takers. They're not the ones that are going to be really great at selling typically, but they might be good at operations, details, stuff like that. And so they're not usually successful. And the ones that are the most successful in franchises, they would be more successful outside of it. And they usually leave. So there's a diminishing return. You buy into a property management franchise, what do you get? Well, with most of the 2 top franchises in the industry, you get a really generic name. So generic names are the kiss of death when it comes to brand recognition and memorability, which is the crux of the best, warmest leads, which is word of mouth. So they have names like Property Management Inc. Sorry, guys. And Real Property Management. Sorry again. But these are names that people can't remember because they're so generic to the category.
Is your brother still working with that franchise out of curiosity?
No, he left it. He now has a company called True Door Property Management in Orange County. And I think he got up to like 1,000 doors, but there's been a sell-off, right? So I think he might be down to 800. I don't know, but
And he's more happy, obviously, as his own business, and he's more profitable.
well, because the challenge is you're usually paying like, I don't know, 6 to 8% of gross revenue, which is a lot to the franchise. But what are you getting in return after the first year of business? Not a whole lot. There's a significant diminishing return on that investment. I mean, imagine like what investor wants to pay in perpetuity 6 to 8% on an investment that's no longer giving them any benefit. And so and I'm not going to say they don't give any benefit, but they usually charge for all the additional benefits. Oh, you want to do SEO or pay-per-click, and they get you focusing on all the cold lead channels that aren't as effective. And they charge you for those services, and they charge you for the website, and they charge you. So they're making money every which way. The other challenge I have with franchises is that, one, it's bringing unqualified people into the industry that aren't going to be really successful or good entrepreneurs. That's the first challenge that I was mentioning. Second is they're charging a bunch of money and there's a diminishing return. Third, they create a lot of controls. They don't allow you a lot of freedom to do the things you need to do in order to grow your business effectively. So like you have to use our preferred partner to do marketing. You have to use our preferred partner for your website. You have to do all things our way. And if you want to go move into the neighboring city, you have to pay us an additional franchise fee. And those franchise fees aren't cheap. I mean, most franchises, they're between 30 to maybe 60 to 80 grand or something like that. So if you spent a little bit of money with DoorGrow, went and hired maybe a lawyer to do, and maybe bought some, materials that already exist in the marketplace, you would spend a tiny fraction of that amount to get started, and you would be better off, have more control, and be able to compete. The other challenge with franchises is that they oversell their markets. Because here's the thing to recognize: a franchise's number one goal is not to help the franchisee. It's to sell franchises. It's to serve their own interests. That's number one. Number two is to help their franchisees. So in fact, most franchises in most industries have what's called a franchisee association. It's a union created by the franchisees that they don't allow corporate to be involved in. And some of these have sued corporate. So I once did a website for the Jack in the Box Franchisee Association. They're like, we don't want corporate involved in this. Burger King's Franchisee Association sued Burger King because they were forcing them to run promotions that weren't profitable and didn't make sense. Like sell burgers for $1, right? So most franchises get around the franchisee association model by taking the top franchisees and putting them on their board and giving them special accommodations, which is the other dirty secret in the industry. So they'll say, well, we'll give you the entire exclusivity on the whole state of Colorado or the whole Dallas market. Whereas I had not 4 clients, but I had 2 clients competing with, there were 4 real property management franchisees in Vegas. They're all competing with each other underneath the same brand. So it dilutes their market share and their ability to get attention and to attract business, even with the brand that's generic, between each other. And some of them didn't like each other. One of them got sued by a whole bunch of their clients because they had a business partner that walked away with the whole trust account and funds and fucked the business up. And the other one that was in their market were getting bad reviews for their company, right? They're hitched to them. And you're then competing because all of them are allowed to kind of cover Vegas, but they're competing over, with each other, which isn't a savvy business model. If they had their own brand, their own business name, and could compete with 4 or 5, whatever, maybe there's 6 now in Vegas, they would probably be able to eke out a lot more market share and establish themselves as a healthier company. And they're more in control of their reviews. They're more in control of their business.
Interesting. That's some good points I never thought about that I could see that makes sense, right? Like, because it's all about, you always got to wonder, do you want to build your own brand? And that, right, you're only building their brand, essentially. I mean, you can definitely sell it down the road if you built a successful franchise concept, but
they make that difficult though too. Sometimes they say you have, like I had a client, they had a franchise location in Vegas. They had one also in Florida, and corporate she said, I want to sell the Florida one. And she said, you have to sell it to somebody that we pick as a franchisee at the rate per door and multiple that we determine. And she said, fuck you. And she basically sold the doors to a neighboring company and then handed the shell of an empty company back to corporate and said, here's the business. So instead of selling the business, she just sold off the doors. It was her loophole around it. Right. So, yeah.
Interesting. Learn something new every day.
Yeah.
Well, yeah, that's pretty amazing. I think we dove into some really overall amazing topics that any business entrepreneur should be looking at. Where's the best place to send them to find out more about you and your services?
Yeah. So, if your audience are generally investors, they might be more interested in like, how can I find a really good property manager? So you can always just reach out to us at DoorGrow. I really believe we have the best, because the healthiest property managers are the people that buy into our philosophy of being ethical, providing really good service, charging what they're worth so that they can provide really great service. And I really believe our clients are the best. So if you're looking for a good property manager, reach out to DoorGrow. We've got clients or people we work with in every state in the United States and beyond. So, and then anyone can check us out or find us at doorgrow.com. I have a podcast called The DoorGrow Show. If you're interested in property management and want to get nurtured in our funnel, you can listen to me chat on the property management podcast that we've got there. You can check that out at doorgrowshow.com, or we're on iTunes. And that's probably the easiest way to get a hold of us. So
awesome. Well, I really appreciate it. You inspired me to keep on reinvesting in myself through different coaches. So I got to up my coach game and take it to the next level. So thank you.
Hey, I'll point something out to you. So you mentioned earlier, like talking about like the expensive coaches. And I think really we all have to get to the point where we recognize that coaches collapse time for us. It actually makes us more money. And the idea you mentioned of who, not how, you can go a lot faster. Instead of trying to learn how to do everything, you can get somebody that can just say, this is what you need to do. It collapses a ton of time. You make money faster. Like any of us could learn everything eventually, but it's going to take you a decade longer without coaches. I guarantee. I tried to be that guy for a long time. I could just watch enough YouTube videos or read enough books or take enough courses, and eventually I'll get there. But you get a coach, you're going from point A to point B the fastest way possible, and they can point you in the right direction if they are. And so it's not really, it doesn't cost me money. Any good coach I've ever had, I've made easily 10 times the amount of money, usually within the first month of bringing that coach on. The good coaches have an ROI. So it's not really an expense to me. It's a way of making more money. So now who can I spend the most money on to get me making even more money the most quickly is more the mindset.
It's an investment.
Totally. Yeah.
That's a different mindset. And that's what I was like looking at the prices. I'm like, oh, sticker shock at first, but it's like, wait, unpack this a little bit. It's what's the real value? And like anything, I mean, you might hire a coach that doesn't do what you thought they were going to do, and it didn't help you. The idea is probably to get referrals, and talk to people that have been coached by this group, right? Because that's a hard thing too. Is you got to kind of validate. Like everybody kind of gives you a good sales pitch, but it's like, how do you really know? Like you want to see elite people that have run through their coaching program. In my mind, like who have you coached? Can I speak to a couple of people just to kind of get the framework of your coaching system? Because people oftentimes want you to dive in, and it's like, I don't mind spending money, but I also want to know what I'm diving into a little bit. And that's where I get kind of stuck on some things.
I'm just like, for me, I'm just super transparent because I don't want to waste time, doing that. So I just we give out a free training, like 7 frameworks for growth. And I teach them all the principles of how we're going to grow their business. I even share our top strategies, everything. And tell them we're going to support them on doing all of this so that they can, it makes sense to them. They can look at it and go, oh yeah, this makes so much sense. Why I've been focused on cold lead marketing. It's not working. And I can focus on warm lead generation, grow faster in less time and spend less money. And it just makes sense. And once it makes sense to people, they'll sign up. Like it's obvious.
That makes a lot of sense right there. So yeah, you share a lot with them. It's
And
like
then having case studies doesn't hurt. So we have more case studies, documented case studies than any coach in the property management industry. So, capturing those wins with your clients and having that social proof is like a game changer for any business.
yeah, that's gold right there. That's pure gold.
It's the most easy way to convert anyone to any business is to just take some of your happiest clients, whip out your cell phone, selfie style next to them and say, "Hey, I'm here with Fred. Him and I been working together. Fred, what problem were you dealing with when you started? And what results have you noticed since?" It's super simple. And you have 3 or 4 testimonials like that. They'll just believe that's how your business operates. So for most businesses, that's easy social proof. It makes people feel safe.
Yeah. So whatever business you're in or listening to, or you're starting in the future, these have been really not really specific to property management, but if you just take them for whatever you're doing, they're so wise. It's true, right? Like social proof, people want to know, like, hey, if there's 4 or 5 people that have left a really good review, this company's probably legitimate. This coach is legitimate. That's what people do now, right? We go online and we're looking for good like when I go buy something on Amazon, I don't spend a lot of time investigating. I just look at the reviews. If 5,000 people have given it 4.63 stars out of 5, then it's probably a good product, and I'm going to buy it, and I don't have to spend 5 years investigating.
Right.
That's good. Well, thank you, Jason. This has been a great show. A good mind shift for many people that are listening to this. Just think a little bit differently and invest in yourself and keep on growing. Well, thanks, everyone. We'll see you on the next episode.